So, Bobby and John, welcome to Closers Club 13. How you doing, guys?
We're honored to be here. We're super psyched. Thanks for having us.
Our pleasure.
Thanks, guys.
Cool in the gang. Cool in the gang. We're kind of good. We're psyched to be here. We've been about 30 months at this, and we're Bobby and John at Blue 22 Capital. And we'll tell you a little bit about ourselves, and then we'll tell you about this exciting deal that we just did in Pittsburgh, North Carolina, right outside of Raleigh. A really great deal that you can be excited about, Jake, as well. So yeah, I'm Bobby. Partner's John. I got a doggy. He's got two kids, we're regular guys that are doing real estate investing.
Gino, I'll reserve judgment on as a beer maker. I'll reserve.
I knew the
judgment
Coors
on
Light
this.
thing was
I
going
was
to.
Coors Light here.
I really was going to let it slide, but Bobby felt the pain and he said, "You know what? I'm going to skip Jake. A little bit of embarrassment. Let me slide the deck, go to the next one." But I almost without certainty. No, I'm a winemaker, so I know when you're making alcohol, you have a certain degree of taste, I guess. And I don't know. I'm more of a Sam Adams kind of guy. I'm more of an Anchorstein kind of guy. So that's probably the type of beer that you make. And I hope
last week it was Guinness. He doesn't know what he's talking about, guys. Let's move on.
It is Guinness, but I mean, I don't want to say I'm Italian. I can't think. I can't let publicly know that I drink an Irish beer. If you're Italian, you can't do that. So,
you're gonna just sacrifice your ethics for being
I'll let them. Right, I'm not gonna say it's a Stella Artois or it's no. I'm gonna.
I don't even think that's an Italian beer. But anyways, moving on.
As long as it's cold, I think. But just a little bit about how we got here. We were John and I are both professionals. Doing the corporate thing. And after John's from Philly, I'm from DC. A couple fellows raised, and did our MBAs, and then did the corporate thing, managing international projects, State Department, USAID, and we did that overseas. So we've been from Mongolia to Managua for myself, and John's been from Bolivia to Brazil. And we were doing that. And once I read the Rich Dad Poor Dad, after even the fancy MBAs, I'm like, holy cow, I'm the poor dad. I did everything right and got the nice fancy degrees. And that was a bit of the catalyst.
And the debt to go with it, right?
Exactly. Yeah. And then so in 2011, me and John, he was managing 25 people, $25 million in Nicaragua. I was in managing a $13 million project. And we were having cigars and rum, talking philosophy, et cetera. And John bought a book. It was the Burr strategy before the Burr strategy. And he's like, I think I'm going to do it from Nicaragua. He knew Philly, good neighborhood, bad neighborhood, good neighborhood. And he did a single family, bought it for 40K. And the recipe, bought it for 40K, put $7,000 into it, valued it at 70 grand after he put a $12.50 a month renter in it. And then just like the infomercial, got his money back. And from Nicaragua, he rinsed and repeated and built $1.5 million portfolio. Called me up around COVID, and then he also did some investment notes, etc. Called me up and he's like, two things. One, let's do multifamily. This is going to take forever. And then two, we got to move where the population and job growth is. And then we moved to North Carolina July 1st of 2021.
And I remember that call that I had, the first call to two of you. I remember John was still in Brazil. And for those of you on the call saying, well, it's not my market, I got to fly a couple hours. He was in a different continent and he was able to do that. So those are just limiting beliefs. If you get into the right system, doesn't matter where you are, you can still have success. Because he was there.
Look at the commonalities, Gino, between the Zoe and now this. You got to get a little uncomfortable to make this happen sometimes, right?
Yes, absolutely.
And then we buckled up, and I'll tell you a little bit about discovering Jake and Gino and kind of that, right? So we decided to do this. We're moving our families to North Carolina. We're like, hey, great, we've got this vision, we've got investors, but we don't have the map. So one is just kind of that, what is that roadmap? And then two, you start talking about your business at Christmas, and your brother-in-law is like, count me in for 100. My sister's like, count me in for 50. And you're like, these are people we love and their money. And they say that smart people learn from their own errors, but wise people learn from the errors of others. Mm-hmm. So we like good consultants, we looked at 7 programs, looked at all the different attributes. But when it came down to it, we love the community, the culture, and the go-giver nature that keeps coming up every day of the Jake and Gino community. And we said, that's a good fit for our values. And that's what brought us to Jake and Gino. And then it's just been a roller coaster, not a roller coaster, but it's been a rocket ship of a ride, really. But it's the riches of the community and the education and the coaching to be able to call somebody and be like, hey, this is what we're underwriting. What do you think? What about insurance? What about this? And then it was the law of the first deal. We're like, should we do it? Should we do it? Boom, we did it. And then within 10 months, we closed our first deal. So, and it keeps on. We want to, have that same spirit of being those go-givers and advising on other people on specific issues. We'll have our contact information at the end, but I'm happy to reach out and give back to the community as much as I can too. But what a journey. Then the deal, what everybody's excited about.
Love the buckets here, guys.
Yeah.
All right, so this is Creekside at Chatham. It is a 41-unit property on 5.8 acres, 4 blocks from downtown Pittsboro, North Carolina, just outside of Raleigh. It's a booming industrial county. It's got a couple of major mega site investments that have come in advanced manufacturing. You've got Toyota, you've got electrical vehicle manufacturer, you've got computer chip maker, just a lot of growth in business. Raleigh has been booming. Raleigh MSA has been booming now for 2 to 3 years. And it's really driving the workforce housing need and really creating that dearth of supply that's needed for workforce housing to support all the growth just outside of Raleigh, North Carolina. So this is, $100,000 a unit, which may sound a lot, but for Raleigh, North Carolina, where the average price per unit is, you can get up into 200,000s. This was a process of, when we get into the three pillars of buy right, finance right, and manage right. This was something that we saw, and we had been negotiating soft market. We found it from a broker that we had been, that we've been keeping in touch with. We going out looking at properties, going out having drinks, lunch, just keeping in touch. He knew us, we knew them, they trusted us, and this was probably a 5-month process where for this deal to work for us, given, and again, this was closed in November 2023, right? So this was 4 or 5 months ago, and sort of the peak of when can you do deals? Can deals get done? The seller had initially wanted about 125, 130,000. We came in at about 93, 95. We worked on it for about 5 months, multiple LOIs, and went in and came off, went back on again. And when you look at this and you look at the market, you look at the population growth, 20% population growth over a 10-year period, you're seeing just 1.3% market vacancy for 1 bedrooms and 2 bedrooms for this type of workforce housing. We were able to get based on our buy right criteria, we were able to negotiate down and make this a deal that could work despite tight markets, despite a 7.75% fixed interest rate. That hurt quite a bit. And Bobby's got a story for that afterwards, but the deal worked. We were still able to get 78% loan to value on this. It's still, in terms of your capital stack and your cost of financing, 7.75% hurts, but it's still a lot less than what you're paying your LPs in terms of returns. And what we liked about this and what enabled us to really close the deal on the financing was that there's no prepayment penalty. And so we can take
touch
this
on that for a second, though, because I feel like you're like holding your nose at it. And look, we just did a deal. It was 7% on the rate.
Mm-hmm.
You get inflation to cool a little bit. You get the 10-year to drop to 3. Okay. All of a sudden, a 70% LTV or something like that. You're going to be looking at 4.5% debt at some point again.
Yeah.
Right. And so if you're doing good at almost 8, what does this deal look like when you refi? Okay.
Yeah.
That's the thing. And if you can make it work now, that's going to be, the cherry on top. And, I think to your point about, wow, 100,000 per unit seems like a lot, guys. It's going back to that profit per unit, right? We're doing a deal right now. It's 143 a door. Okay. And we expect very, very, conservatively to make $300 a unit on it. Okay. In profit per unit. So I think it's all relative with this stuff. And I think that the rates definitely hurt right now, but doesn't mean you can't make deals work and work really well.
Well, that's why it wasn't 110 or 115 a door. So it's all relative. Once again, if you'd have bought this deal 2 years ago with 3.5% or 4% debt, it'd probably be 130 a door. And it's the same thing when you go back to Zoe's deal from the last deal, the price per door. That's why I was sitting there for a while, because they weren't able to get it because the cost of capital was a lot higher. And you made a great point. You're giving the bank 7.75%, and you've got 80%, almost 80 coming from the bank. So that's still cheaper than what you have to give to your limited partner. So that's another amazing point that you made. So when you're looking at it from, it is relative, but there are a lot of positives to it. And like Jake said, 18 months from now, rates probably will be lower, so you'll be able to refinance, and you don't have a prepayment penalty, which is phenomenal as well. So that's
a very important point there. Yeah,
that is excellent.
Yeah, and this is a 5-year hold. It's, you know, it's fixed rate, but it's long-term debt, no prepayment penalty. So our plan, the deal works and the returns work based on a 5-year hold. We don't have to refinance for this deal to work to get the returns back to it. And so this is something that this is our third deal. We've done fixed rate on all 3 deals, and you know, we sleep well at night because
you like that? Yes.
We know what we're going to wake up to the next day, and so that's,
well, speak to what could the alternative of that be? Because I think some folks may be feeling the pain. I'd love to hear your thoughts.
I'm gonna help you on some of those deals. I know, but
no, share. I mean, I really though. I love that we're talking fixed rate debt right now. So just, you know, for the folks maybe that are out there that are just getting into the game, what's the importance of that?
Yeah, I mean, it's you know, it locks in your cost, it locks in your you know, your ability to not have to consider additional capital calls when when your cost of debt goes from 4% to 8% overnight, or over a 3 to 4 to 5, 6 month period, as was the case with the market over the last 12 months or so. And then your debt payments skyrocket, and then you're no longer to make you don't have the cash flow, you don't have the net income to service your loan, right? You have a couple of options
just to hold on to the property at that point. And so what he's alluding to, folks, is that, you know, if you're new to the space, you know, people were buying floating rate bridge debt over the last few years with something called a rate cap. The rate caps expired. To buy new rate caps went through the roof, you know, or their debt, you know, and their debt was shooting up. So it created a very unsustainable position to hold on to their properties because they didn't get fixed rate debt. And when we say finance right, the core pillar to finance right is getting the rate risk off the table, as John alluded to in the beginning, getting fixed rate debt, so you don't have some kind of event that you think, oh, everything's gonna be hunky dory, you know, rates are never going to rise, and then you get caught. Right? We want predictability with our assets, and to his point, you want to be able to sleep at night.
There's 2 ways you lose money in real estate. 2 ways you go bankrupt. Basically, you either run out of time, and that's what finance right does. You know, when you don't have that fixed rate long-term financing, all of a sudden you're running out of time, your interest rates go up, or you run out of capital. And what you saw from the very first deal, Zoe raised an extra $300,000 for CapEx. So you don't want to run out of money. And that's what the previous owner did. So getting these budgets in, raising $1.8 million, having the cushion, having the manage right, will allow you not to be able to, you know, have enough money to run out of money. And then the finance right, having it locked in for 5 years where you're able to do the work and not be under the time constraints. Because once you're under time constraints, things are under pressure. And if they don't execute and they don't go smoothly, that's when problems ensue.
Yeah, I should mention as well, we have about 6 months of operating reserves. And so we wanted to make sure that we have sufficient capital reserves, sufficient operating reserves to be able to, you know, recognizing this is a value add investment. There's a lot of turning in terms of tenant demographics we have to do over the first 6 to 8 months. And so just making sure that we're not cash constrained and not under raising, in the sense of then having to go back and make capital calls in the case that, you know, things were to go south. And so important for us as well, in addition to you know, the conservative financing, is ensuring that we have adequate capital reserves and operating reserves to be able to withstand some of those initial potential bumps as the property gets underway.
That under promise and over deliver. You know, is it a real treat is when the bank sent their third party appraiser, you know, it's 4.1 and we're going to put 600 into it. And they said, after you execute your business plan, it's going to be worth 6.1 because it's really in an A-class neighborhood. Disney's moving there, you know, big players. We're tiny amongst big players. That's 6.5, it's about 6 acres, 2 blocks from a downtown area in booming in probably the greenfield development outside of Raleigh. So very exciting.
That is awesome.
Awesome. Go to
Then manage right. This is, we're learning that the asset management and the manage right is by far the most challenging and nuanced aspect of the for us at least in multifamily investing. It's can't stress the importance of having a strong property manager, that understands the asset type, that understands the market, that understands the tenant demographic, that has experience in the market with similar deals, and that's able to really get into the property management and effectively supports you in implementing your stabilization plan, your business plan. And so we had, our property manager is an owner manager as well. So, manages properties, but also is an investor and owns properties. So was with us from the very beginning as we did the due diligence on the property, looked at the underwriting together, looked at the rent growth projections, looked at CapEx and interiors and what they would cost, and really was with us from the beginning. And so when we did take over this asset, we had the property manager ready to go, had the takeover was seamless, and has really done a wonderful job just in terms of getting that transition over to our asset management.
And I appreciate his attention to detail with the trim around the tub. That's the first thing I saw on the left. I'm really glad he got that, because it was not looking good.
Yeah, so this is a 1978 property. So this has got, this is, for us in terms of the asset management, it's three really areas to focus on. One is getting rents up. The second is managing expenses, and then the third is delivering on your CapEx. And for us on rent growth, I mean, we're seeing out the gate, we had a vacant unit. We just posted, we ran classic as is, 1 bedroom, and just threw out $100 above what the current market rents were, and had 5 applications, and had the property, had the lease signed, and the day after we
So what
put it
was
out
the rate
there,
at on that?
the rate for $10.50.
Nice.
Yeah, $10.50 for 1 bedroom. And then we just did, we have probably 10 of the 40 units have subsidized tenants in place. And as we're in this process of turning the property, we had mentioned to the housing authority that we're going to be in this process of transitioning. We're looking at investing in turning the units and growing the property along with the city, and they came back. I think they were paying $10.50 for 2 bedrooms subsidized, and came back with an offer to pay $1,400 to keep some of the tenants in place. And so you see the managing the income growth we think will be relatively easy, but it's going to be challenging given that it's a 1978 property, is managing the CapEx expenses, managing the interiors, and trying to keep the operating expenses under control.
So you got this, you want to convert another unit, the office, into the 41st unit. You're gonna pull that off also? That's great.
Yeah, and we actually have a guy that's helping us out with the turns, who's looking for a place to stay. That's kind of fixing it up, and we're getting rent out the gate for that 41st unit, just by having somebody that's in there, a maintenance guy that's in there, kind of helping us with just some of the initial terms in the property.
It's awesome.
Well, and you guys are blowing out the 1% rule at $1,450 or whatever you said, at $100 per unit acquisition cost as well.
Yeah.
People are excited to be there because it's so central. UNC of Michael Jordan fame is right 20 minutes north. And the Raleigh airport is about 44 minutes east.
Nice.
So it's a pretty hot area, and a lack of affordable workforce housing, and just the magnets of Toyota Battery Company right here, computer chip manufacturing. So North Carolina is growing. And the workforce is growing from historically it's been a large workforce area.
Mm-hmm.
So much so that John and I voted with our feet and moved our families here,
There you go.
43 months ago.
That is awesome. Do you guys have anything on finance right?
Finance right?
As far as slides, yeah.
You had on the previous.
Oh,
That's on the slide.
okay.
We
Gotcha.
can talk to it.
Gotcha. Okay.
Yeah, so this was financed through community bank debt. We worked with a local broker, and we looked at a number of different options. We had a bank with an LO with a commitment letter in that backed out last second. Had some internal issues with
Did they
their
back out or did they raise the rate on you? They legitimately backed out, or you kind of said, no, this is not going to work?
People disappeared.
Yeah,
Shit, because
they
we've
had
had them
some
essentially fire
major,
themselves at
internal.
like the 1 yard line when they want to like bait and switch the rate, but they actually backed out. Okay. Yeah.
Day 28,
Ugh.
we got the letter of commitment, and we didn't hear back from the guys. The CFO left the bank, number 3 left the bank, and the guy above our guy left the bank, and he's like, "I'm so sorry," but it's a Richmond-based bank that then we had to scramble, renegotiate the PSA, but we got it. Sorry, John, that was just dramatic.
No, that's it. Yeah.
Oh, and that was all happening while John was on an international business trip in Jordan, taking his wife. So business trip plus wife, and then day 28, it falls to crap. So he's negotiating in the middle of the night to try and get the deal going. And then this is in the middle picture is him having a beer at the Dead Sea, and his wife finally, after he negotiates it.
Where are you guys snowboarding there?
The Great Hills of North Carolina. Over
Where
by
is
your
it?
border over there at Beach Mountain.
That I went there this year. As I'm like, that looks familiar, and I see the grass. So here's the thing. Next season we're going, but we're drinking Coors Light. All right.
No. We'll practice our
I will meet you guys at beach
in.
at the top, but we're drinking some CL smoothies.
It's actually funny. I would say I'd meet you guys if you bring me Guinness, but I don't snowboard. I hate snow. That's why I moved to
He
Florida.
doesn't really drink beer, so like we don't need him. We'll hang out with the boys.
I don't want the cold weather. You guys can go snow. Find me a beach. I'm happy at the beach. I like the beach on the left, to be honest with you. So that is awesome. That is awesome.
But
Congratulations.
it just underscores the commitment to making it happen, and keeping your cool under pressure. Things, on the prior deal, so they raised the interest rate between the appetizer and dinner when we were dining with the bank. Half a point in June of 22. So we're this is the commitment of John, and then we get across that finish line, but that's when the work starts. But we are just loving it and getting under the hood on the asset management.
Awesome, guys.
Oops.
All right. So then what's next? What are you guys doing next? And then I'll have to see any contact info.
Yeah, exactly. So what's next? We've built this. We've been at this for 33 months, since July 21, when we moved down to North Carolina. And boom, we loft first deal. We got our 8 units, then we got 30 units, then we got 41 units. We've got 8 million under management right now. Expanding out, we got a virtual assistant and kind of focusing our team. We're really focusing on our buy box. Where do we add value, and what is we know our markets. We're here. We're boots on the ground. We can be anywhere in North Carolina within 24 hours. So really, and we're above the mom and pop and below the big boys at that 50 to 100, and really that value add space of 1985 plus. Okay. We're tripling. We just took a retreat ourselves and focused on what are we good at, where do we add value, where do we want to focus, and what's our vision. And that's what we are really tripling down on, is North Carolina and that value add in that buy box, and looking to grow to 100 million. So over the next 3 years, get that conveyor belt going, so we can get a conveyor belt with 100 million on it, and then acquiring 2 to 3 billion, 25 million, 25 to 30 per year, so that the conveyor belt is just going. That's our goal. That's our vision. Very niche, very focused. And what the ask. As we're talking to a bunch of folks, we're always looking for partners, with that capital and that equity raise that can bring, $500,000 to 2 million to a deal. And then we're also, as a team, we've got some virtual assistants, and we're trying to grow our focus team. But when we shake hands, you'll notice that mine are a little soft. So we're really looking for somebody that has a little bit more asset management, that knows what Jake just recognized. Is that a quarter round? Around the tub, what is that? That cap.
You got Gino hands, is what you just said.
open my toolbox and there's a list of phone numbers.
I'm just gonna get some denatured alcohol and start rubbing my hands and make it a bit tougher, I
Yeah,
guess.
that'll, you know, I don't know. That might just take the skin off.
Oh, man,
A younger Jake that lives in North Carolina. How about that?
Well said.
love that. Do you guys have contact information? Because I really want people to get your contact information.
Absolutely.
Anybody's looking to connect, anybody wants to talk about deals, anybody's possibly has a deal or they've got capital sitting on the sidelines, it's a great time to make a connection with Bobby as well and with John and, you know, further the conversation.
Absolutely. I'm sales and marketing, so you guys feel free to reach out. There's meetings. We could set up a meeting and just have a call. Happy to help, share any information. Looking for a deal, looking to invest in anything. We want to embody that go-giver attitude of the Jake and Gino community. So thank you for everything.
Beach Mountain 2025, guys. We're doing it.
Absolutely.
Let's do it.
Yep, right here. I mean, if you want to keep this slide on real quick, if anybody is listening to this right now and you want more information on the Jake and Gino community, you want to learn how to work with, you know, our group, learn how to buy right, finance right, manage right, take a picture of that, schedule a call with Scott and learn more. I mean, I like these two guys right now because they did an 8 unit on their first deal and they learned. Like Zoe said, you don't have to go out and buy 100 units. You're going to eventually get to that 100 unit range within the next 12 to 24 months after your first deal. They did 8 to 30 to 40, and that's the progression. So don't think that you can't do it because they're in the corporate world. Jake and I were a pizza guy and a drug rep. Zoe was a nurse, and her husband Nick was a concrete driver. I just think Bobby said it best. I'll end with this. He didn't have the map, and I didn't have the map before I met Jake. And the framework really teaches you to stay within, as Jake likes to say, the cones and really understand how to create what Bobby said, the buy box. Learn how to finance the property properly, get that risk off the table. Then ultimately, John said, manager, it's the most important thing. You have to learn how to manage these assets. You have to learn how to understand how to treat them like a business. And once you do, it all starts falling into place. And you've done 1, 2, 3 deals. The numbers just get larger. They just get larger from 30 to 60 to 80 to 100. The principles don't change.
Excellent. And I think it's fair to say that we believe in buying deals for the long term. Think in decades. I'm Jake, he's the G Daddy, and we had some great guests tonight. So appreciate everyone.